Hey guys, Jeb Smith, Coldwell Banker Residential Brokerage here in Huntington Beach, and I'm back with your October 2019 real estate market report. So, been a lot of news, a lot of good news out there actually with regards to the real estate market and pending home sales with interest rates, all that good stuff. So I want to take a minute, break it down a little bit, and let you know how that impacts you as a buyer, seller, or investor in today's market. So last week we got news that the August pending home sales nationwide were up, I think, 1.6%. which is up month over month and year over year in all four of the major regions of the United States, which is good news, right? So people are still buying homes. A lot of it is due to lower interest rates. So interest rates are near 3-year lows. They've ticked up a little bit, but interest rates are still really, really good. There's a lot going on with regards to the global economy, if you will, trade wars with China, some things going on with Russia, et cetera, that may be impacting the market a little bit with regards to interest rates, maybe why they're not as low as they could be. The Fed recently reduced the Fed funds rate, but it didn't really impact the market so much. I mean, a lot of it was built in and expected, and so rates kind of stayed the same, but overall rates are really, really good. And pending home sales were good. So how does that translate? What does that mean for you if you're a seller or a buyer in today's market? And the reality is that it really depends on the price point that you're in, right? Here in Southern California, the market is still moving along full steam ahead. Days on the market have ticked up a little bit, but pending home sales are still moving along. If you're over that $1 million threshold, the market starts to slow, and the higher you move up into that luxury price point, the market is going to slow considerably, which means that days on the market are going to go up considerably, which is at the end of the day, it's going to affect price. It's going to affect a lot of things in that luxury market because there's just not as many buyers out there looking in that price point. Whereas if you're under $1 million and priced right, things are still moving along pretty nicely. It doesn't mean that you're getting multiple offers. It doesn't mean you're selling the first weekend. It doesn't mean you're selling in the first couple of weeks, but at the end of the day, things are still moving along when priced right. So, the higher, like I mentioned, the higher you move up into those price points, the lower it slows down. I think if you're in between $1 million and $2 million, average days on the market's about 155, where if you go to 2 to 4 million, it jumps to like 250 something, and then if you're over 4 million, you're in like the 550 days on market stage, which is like 1.5 years to sell your property from the time that you list it to the time it actually goes in escrow. So that's a considerable difference. Whereas if you're under $1 million, the average days on market is somewhere around 85. So the things are still moving along very, very nicely in that price point. So that brings me to the next part of this. So if you're a buyer in today's market, if you're in that luxury price point, you really have the upper hand. I mean, it is a buyer's market in that price point because things are sitting longer. We're going into that time of year where, things aren't going to move as fast. It's going to take longer for things to sell. But people that usually have their homes on this time of the market, this time of year in this market want to sell their property. So, the negotiation really sits in the hand of the buyer there. And the longer it sits on the market, probably the stronger your negotiation is. I mean, the ability you have to negotiate. Whereas if you're in those lower price points, now low is all relative, but if you're under $1 million in our market, you don't really have the upper hand. It's still a seller's market. Inventory is still relatively tight. Buyer demand is strong just due to where interest rates are, right? And there's a high likelihood that the Fed will lower the Fed funds rate again this year. How it will impact the market is to be determined. A lot of it could be built in just from the idea that we already know that the Fed is going to lower the Fed funds rate, but it's really up in the air at the moment what's going to happen. A lot of lenders aren't really pricing in a lot of what's happening out there because they do, in my understanding and talking to mortgage brokers out there, mortgage bankers, is that a lot of these companies know that the rates are going to go lower again. So they're hesitating in lowering rates too quickly because they don't want people to refinance and then rates go lower and refinance again. Because when that happens, when people refinance multiple times, banks lose money, and if they can hold off on lowering them each time, and just lower them over a period of time to whatever the rates end up at, banks are going to make money, right? Because they're not going to have multiple people refinancing multiple times and selling loans that they've recently purchased and what have you. So as a buyer, like I said, if you're under that $1 million price point, it's a seller's market. If you're over it, it turns into a buyer's market. But at the end of the day, it really depends on what you're looking at, the neighborhood that you're in, because all of that is going to impact whether, how strongly you can negotiate. And as a seller, it still stands true to what we've been saying for years. You got to price fair market value. You've got to be accurate, regardless of what price point you're in. You need to reflect the actual market value of your home in order to get the most amount of money, right? So when pricing, make sure you're talking to a professional real estate agent that knows your area, and knows what they're doing, that has a reputation for getting top dollar, etc., because that's ultimately what's going to help you achieve that goal. So and if you're under $1 million, you can get a little more aggressive on your price. The lower you go, honestly, the more buyers there are in those price points. And so the more aggressive you can get on your pricing. But fair market value is ultimately what's probably going to get you the most amount of money in the market that we're in right now, right? Where do I see the market going? It's not going to crash. Nothing big happening anytime soon that I see. The fundamentals of the economy are very, very strong, and we expect those to continue for the foreseeable future. But I do appreciate you taking the time to watch. If you want to subscribe to my channel, like the video, that gives me an idea of who's watching. Comment below if you have questions. I would love to answer those. And again, I'm here to help. So if you have questions, feel free to reach out to me directly. Would love the opportunity. And as always, I do appreciate you taking the time to watch, and look forward to seeing you again soon. Have a great day. Bye-bye.